Let's keep talking some earnings here. I got Mr. George Tsilis joining me for a look at a healthcare stock that's been on a pretty good run over the last year, up in 52 weeks, 26%. Stryker. George, good afternoon. Medical tech, it's got a lot of different things. When we're looking at like hospital and demographic trends, the same things we kind of talked about with Intuitive Surgical. A lot of these things have really been hitting their stride the last couple of years.
Oh, definitely. I mean, you have to consider things like baby boomers when you look at these companies. Stryker is essentially one of the leaders in orthopedic, replacements for joints, things like knee replacements and hip replacements. But at the same time, they've got their the medical surge equipment business, which includes everything from ambulatory stretchers to hospital beds and things like essentially emergency equipment, and even the dental aspects of hygiene, oral hygiene, and things of that capacity. But so we're very well diverse business, been around since 1941. And one of the things I did notice, just a side note of the industry space, is this whole group, which includes companies like Abbott Labs, Medtronic, so medical device companies and consumables have actually performed well, at least on a relative strength basis over the past couple months. But nonetheless, if you look at Stryker's earnings, they posted some better than expected numbers. EPS at $4.01 versus the estimate at $3.87. So that was essentially higher by close to 16% year over year compared to last year for the same quarter at $3.46. And if you look at the revenue, the company beat, coming around $6.44 billion versus the $6.36 billion estimate. And that was higher by 10.7%, just rounded up to 11%. Compared to $5.82 billion last year. One of the things about Stryker is this whole group also has been going through a lot of consolidation. So what the company did report is they're expecting, rather modest EPS and top line sales for fiscal year 25. They say organically now between 8 and 9%. Doesn't necessarily mean they aren't going to make acquisitions or just strategic ones, which they have been making over the past half a decade or so. EPS also came in ahead of estimates. The midpoint that I have is $13.51, but they actually came in higher. And if you look at the midpoint of the higher guidance, it's higher by about 6 cents, to 13.57. So overall, the trend just continues for Stryker, higher by about 25% over the last year, and their margins continue to improve. Their year over year compared to forward guidance for EPS just continues to improve because they're expecting about 13% EBITDA growth on just the organic sales alone, around 9%, not including, of course, acquisitions, which the company is still open to.
George, that acquisitions part seems pretty interesting. Something to, I think, watch in the sector because a lot of valuations are still in the healthcare group quite reasonable, and many argue value. For Stryker, they traded a forward PE of 29 versus trailing 39, so the market clearly has some earnings expectations for them, but they really don't miss a healthcare vertical. Like, you see those carts swinging around the hospital with a bunch of stuff on it, like that is loaded with Stryker.
Definitely. It's all the stuff you don't really think about, that are going on in the hospital if you're ever in the hospital. So with that said, and the other thing is, I'll point this out, is if you look at the balance between the consumables portion of their business versus the installations, it's actually really mixed or really balanced between 50-50%. But the other thing is, I think what's happening here as well, this is just my view, that this group, the med technology group, the if you will, the orthopedic equipment group, and the hospital equipment group is not really looked upon as scrutinized. Let's put it that way, from a regulatory environment. With all that's going on with pharma and of course insurance companies. So with that said, I think this group is not necessarily immune, but is getting overlooked when it comes down to some of the regulatory oversight that's happening, probably in the pharma space, but also the health insurance space.
Nice. All right. Good description, good analysis. Thanks, George.